Okay, we're going to call this public caucus to order. I want to welcome members of the Kohanski and Company audit team to our public caucus tonight. We're having a exit conference to discuss the 2018 city audit. So I want to thank all of you for coming tonight, and I will turn the floor over to you, and then we'll come back to council with any questions that we might have. Thank you.
Thank you. Well, as you can see, this is quite a voluminous set of documents, 70-some pages, so we're going to try to touch on the highlights.
Can you just, I'm sorry, can you move that mic closer and speak into it?
Is that better?
Yeah, a little bit. Will it move closer? Yeah.
Better?
That's good.
Okay.
Yep. Just make sure the green light is on.
It is, okay.
Okay. Thank you.
As again, I said, this is a large document, 70-some pages, so we're going to try and touch on the on the highlights and not get into too much of the detail, because we could be here way longer than I think any of us need to be discussing financial information here. I want to start first, obviously, with the auditor's report, independent auditor's report, and specifically go to page 2, because of the size of the organization and the number of entities involved in the organization, as well as the fact that within the government financial statements, there's actually 2 sets of financial statements within one for government reporting now. One is called entity-wide financial statements, which is based on making the government look like if it were a for-profit business, to make it more familiar to look at. The other is fund financial statements, which is the old way and the way governments have been reporting their financial information for years. Okay. So there's two sets of financial statements within the actual report that we have. The auditor's opinion lists the different areas that we're giving an opinion on under both the government-wide and the fund financial. So as you can see, everything is an unmodified opinion except for the aggregate discretely presented component unit, and that pertains to the city parking authority. There is no, the sewer authority is another entity of that nature. The sewer authority is audited by other auditors, and is actually by us, and is reported within here as a separate component unit. Same thing with the redevelopment authority. That is a component unit that's reported within the financial statements. The parking authority does not have an audit. Because they don't have an audit, we can't give an opinion, so we have to give an adverse opinion on that entity for the parking authority.
Okay, so just to clarify, because I know this is a question that has come up before, if the parking authority were to have an audit, that would be included in the city's audit, correct? And
Correct.
Because there is no audit, that's why there is an adverse opinion.
Correct.
Okay.
One of the other items we want to highlight is on page 3, Roman numeral 3. It's under the heading emphasis of a matter. This is something that was applicable to this year. This is when the city adopted GASB number 75, which we'll look at a little later, and the effect it has on the financial statements. It has a significant effect on, and what GASB 75 is financial reporting for post-employment benefits other than pension plans. And we'll look at where those numbers come into play a little later in the presentation. Just to skip ahead slightly, if we're to go to page 16, 16 is within the footnotes. 16, as we discussed a little earlier, we talk about the parking authority, we talk about the sewer authority, we talk about the redevelopment authority. 16 lists the potential entities that we evaluated to determine if they should be reported within the city. Sometimes the city will have financial obligations to other entities or authorities, or it has control over those entities or authorities by way of appointing the members of the board of directors. When there's entities like that, we have to look at them to determine if they should be what we call component units and include it within the city's financial statements. Some of the items on there, some of them are included just because of the name, because the name may have the city of Scranton name involved in it. Or sometimes other municipalities, those organizations and other municipalities may be part of their city audit. So we kind of try and cover everything so there's nothing left to question as to what's included and what's not included and what we evaluated. So that's what's listed out on that page there.
Okay, Mike, just to clarify on that. So we did receive a question about the it's the Joint Zoo Authority. That's the one in the Scranton Public Library. Scranton Public Library. So the reason that you had to include that was, explain that again?
We didn't include them. We evaluated whether they needed to be included.
Okay, so that's the reason why it's listed there. Just the fact that you wanted to evaluate whether you had to include it, but it's not
Correct.
actually included.
Correct.
Okay.
Just because one year or a previous auditor may have not included it, or included, someone totally new could pick up the financial statements for the first time and wonder why something like that wasn't included. So every year we look at it. As long as the authority exists, we will evaluate whether it should be in there or not.
Okay, thank you.
Skipping over to page 1, which is page 1 through 4, are the financial statements that are known as the government-wide financial statements. These are the financial statements that are the purpose is to make it look like, they make the city report as if it was a for-profit entity. So with that, items that were never reported in previous years before this reporting format, such as capital assets. Fixed assets are now capitalized in these financial statements. Previous financial statements, or the fund financial statements, capital assets are expensed when they're paid. So that's one of the highlights, difference on the statement on the asset section. Under your liability section, we report loans, notes, lease payables as liabilities as opposed to just as capital outlays when they go, or as debt payments. Some of the other items in that section, liabilities too, are the workers' compensation, the pension liability, in addition to the GASB 75, which we'll touch on later, the liability for that. As you can see, that number alone this year, put $210 million of a liability onto the financial statements. So that's a big pronouncement that was put into effect this year.
Right.
Okay. If we go over to page 3 of these financial statements, we'll see that under the government-wide financial statements, there's an unrestricted deficit of $324 million, almost $325 million. Of that, $161 million this year was a direct effect of that GASB 75 recording into the financial statements. Okay.
And Mike, just to go back, so the GASB 75, based on our conversations and what you're saying tonight, those change year to year, so next year you may not have to record that in the
No,
audit?
what happened, because it was initiated this year, this is the first year the city adopted that pronouncement as the requirement. This was the year that it was required to be adopted. Because the city adopted it this year, you have to record a catch-up number for what it would be, which would be the restatement. And then going forward, we have to record the change that'll be calculated by an actuary. So that liability could increase, that liability could decrease. That liability is basically benefits you're paying to, other than pension benefits, you're paying to retired employees or former employees, such as health insurance and so forth. So there's a liability that the financial statements and cities recognizing for these payments going forward. As your labor contracts and so forth change, and maybe some of those benefits are eliminated or increased, that liability may increase or decrease depending on the number of people who are going to be receiving these benefits or potentially will receive these benefits. Okay. If we go to page 4, based on the accrual basis of accounting, which is what the government-wide financial statement format is, you can see that at the end of the year, the change in net position for the city was a $22 million profit. Again, that's on an accrual basis of accounting. So an accrual basis of accounting records receivables when they're billed or earned, and then payables when they're incurred. What this doesn't reflect is cash flows for outflows for debt payments. Debt payments are a reduction of a liability basically on the balance sheet or statement of net position. So it's a little deceiving when you look at that number compared to what you're looking at and compared to your budgeting process, because your budgeting process is done on basically the cash basis of reporting. Okay. So if we go to page 5 now, these are the financial statements that are the fund financial statements. These are the financial statements that have historically been issued for governmental entities, only this format, not the government-wide as well. So this is a little more familiar to what you're used to looking at, in addition to more closely aligned to your budgeting process. As you can see in this format, there's the assets, there's no fixed assets, there's no capital assets for buildings, improvements, vehicles, equipment, so on and so forth. In addition, there's no recording of any type of notes or bonds or loans payable or leases payable. They're not reflected in the liability section in this format as well. If we go to page 8 of this section, this is what would be the profit and loss for the general fund, the OECD fund, some special revenue funds, and then a bunch of non-major funds lumped together. If you look at the total, we're showing almost $21 million deficit of revenues over expenditures. Within that number includes fixed assets that were purchased, because in this format we expense those. So if you buy a police car, if you buy a fire truck, if we buy a dump truck, those items are expensed and reported as an expenditure in this line. The pension payment that was made is an expenditure reported in this line. The payment of the principal on loans and bonds are reported as an expenditure as opposed to a reduction of a liability. So all those payments in this format are reported there. The section below reports some of the items and some of the funding that was used to pay for those expenditures. For example, the pension payment. There was a $22 million bond issue that was essentially used to pay a pension payment. So the pension payment's in the $20 million loss above, but the receipt of the proceeds is in the line section below. So if we combine those sections and look for the general fund area, the general fund basically had a $381,000 surplus for the year. Okay. All the entities together, when you take all the other funds and the fund areas, had a $3 million. And that's with OECD and and some of the other funding areas together. But the general fund is your main fund. So we're talking about almost a break-even analysis for the general fund. There's some schedules in here behind this one, behind the other one, that reconcile from the one format to the other and talk about the differences between the two and what it really is. And basically, the main difference is the pension and the bond on the pension payment. Some of the other schedules are the schedule of proprietary funds, which is your sewer fund. I mean, we summarized that. That's considered proprietary fund. Proprietary funds are funds reported that act like businesses. That's how you would run them, as if they were a business. If they bill a customer or something for a service, and they pay the expenditures to run a service. So that's separated out in some schedules. Some information on the fiduciary, which is your pension funds, assets, liabilities, revenues collected in the pension funds. If you look on page 15 of the pension fund area, you can see the $23 million payment for the pension fund from the bond proceeds was put into to pay up some of the pensions. If we look back, there's a bunch of disclosures related to the pension. We go back towards page 58. We made significant payment onto the pension, but when you look at the pension, the pension funds are broken down into your three funds. Your police pension fund, which if we look at towards the bottom, there's a plan's net pension liability. You can see is $26,768,000 and change. That's the underfunded amount of the pension at this point, at the end of 2018, which says the fund is about 65% funded. If you look forward to page 60, I'm sorry, that would be the equivalent fireman's pension. Pension liability there is about $44 million, and it's just under 45% funded. Okay, and then the non-uniform is on page 42, which is almost $3.8 million, 63% funded. So the borrowing to pay up the pension isn't an ideal situation, no, but I think just to get them to where we are was probably what needed to be done. Borrowing isn't necessarily, and debt isn't necessarily something that's a negative, especially in a low interest rate environment. I mean, most people, when they have to buy some type of capital asset, your house, your car, you take a mortgage, you take a loan. The municipalities and businesses have to do the same thing. So borrowing isn't necessarily a bad thing. Trying to borrow to cover expenditures isn't the best way to do it, but in this case, to get them in and to get some money into the account, especially in this market where the market is doing well, the more money we can get in there, the more this can grow, and it'll help alleviate maybe the unfunding going forward. Kelly's going to talk a little bit about some of the footnotes and go through those real quick.
And I'm sorry, can you just make sure that you speak loud, because it is difficult, even with that microphone, to hear. Sorry about that.
Okay. I'm just going to go through the notes to the financial statements very quickly. There's a lot of information in here, and I'm sure you don't want to talk about a lot of it right now. The first note is the summary of significant accounting policies. So this note contains information about the reporting entity. It explains what entities are included. It explains how the funds work, how the financial statements are set up. So if you want to read that to understand a little bit better what Mike talked about in the financial statements, that is in Note 1, as well as all of the accounting policies of the city. So all of that is outlined in Note 1 to the financial statements. The rest of the financial statements, or the rest of the footnotes, provide additional detail for some of the line items in the financial statements. So if you flip through it, you'll see Note 2 provides additional detail on specifics of the cash and investments in different funds, primarily the proprietary and fiduciary funds. Note 3 talks about some of the fair value measurements, how the investments are measured. Note 4 is just detail of the taxes and fees that are receivable. So it just provides a little bit more information on the financial statements. Sure. There we go. Is that better? If you look at Note 6, this provides a summary of the capital assets of the city. So you'll see the $83 million at the bottom agrees to the balance sheet in the front. Note 8 is detail of all of the outstanding debt of the city, all of the bonds, the notes, the leases. So it shows the outstanding balance at the beginning of the year, all of the payments, all the additional debt that was incurred, the balance outstanding at the end of the year, and then the amounts that are due within 1 year, which would be all of the principal payments due in 2020. You can see that in this footnote. The subsequent pages just provide some additional detail in terms of, the interest rates and all that kind of stuff. So you can read through that. Note 11 outlines the risk management policies of the city, so it includes information on how risks are mitigated through insurance, health insurance, workman's comp insurance, all those kinds of things. That is outlined in Note 11. Note 12 and Note 13 make up most of what's included in these financial statements, and it's all detail on the pension and the other post-employment benefits. There's a lot of information on how the actuary comes up with the liability amounts and things like that. So there's a lot of detail in here. Probably most of it, doesn't make sense to the average person just because it's all actuarial information, but that needs to be included in the footnote. So that's footnote 12, and 14 is the other post-employment benefit note. I won't go through any of that because there's a lot of information in there. Note 15 is just a little bit more detail on all of the fund balances of each of the different funds and what some of the restrictions are on those fund balances. Note 18 is commitments and contingencies, so there we would talk about any legal issues. In this note, we typically leave this as a general note until something is, until we can report specifics on any particular lawsuit at this point, other than the one outstanding item regarding the taxes. Everything else isn't to a point where we can actually disclose anything with any certainty. So accounting principles don't let us do that. So we have to keep it very vague until there's more specific information
Okay,
that's available.
I don't want to interrupt you, but just
Sure.
because I want to make sure I don't forget this point. So page 52, I think we're on note 18 with litigation. So
Correct.
there was a question about the Act 511 case and how that plays into the audit. So what you're basically saying is that you can't according to the accounting principles, go into great detail in terms of putting that in the audit as a note, correct?
Well, that particular thing, that did not happen during the year that we audited. So we audited the year ending December 31st, 2018.
Right, so
that
it'd
was
be
a
a
subsequent
subsequent-
event.
Okay.
But for anything that might have existed during the year that we audited, there's certain criteria that accounting standards we have to follow in terms of what needs to be disclosed and how much detail needs to be disclosed about
Okay.
it. And all of the things that are currently going on in the city, nothing rose to the, met the criteria for specific reporting or even rose to the level of having to record an actual liability for anything that might be out there. So at
Okay.
this point, anything that existed during 2018, there was nothing that met the criteria for being included in the financial statements, according to the government auditing standards. or
And the
accounting
criteria,
standards.
I guess, would be like a threshold of how much the liability would be, and then you would have to report it? in that?
Not necessarily that. I mean, if it would have to be material, definitely. But in terms of likelihood, how much information is available that would lead us to believe that it's actually going to be settled a certain way, like that sort of thing.
Okay, that makes sense.
Do you want to comment?
That disclosure is very dependent upon the information and the letter we get. We send letters to the municipalities' attorneys and ask them to respond to that and list us any potential lawsuits and findings that are out there. So how we disclose depends upon how they tell us if it's probable and if the amount is measurable for some of these pending and smaller lawsuits. And then I'm not talking about the Act 511 issue right now.
Right,
Again,
right.
that was a subsequent event disclosure. So on the other lawsuits, in addition, we look at, as you mentioned slightly, a little bit, was materiality.
Okay,
For example, under general fund here alone, materiality for our audit purposes was $1 million. So if there's something that's a couple $1,000s or $10,000 or $20,000, it wouldn't even have to be disclosed by us because it wouldn't be material to the financial statements themselves.
okay.
Okay.
That makes sense. Thank you.
Yep.
Okay, go ahead.
Just what I want to jump to now is footnote number 22 on page 56. This goes back to what we were talking about a little earlier on the accounting change. You see on the bottom, towards the bottom of the page, the net position, and this would be what the basic, known as retained earnings. It's called net position when you're talking government-wide financial statements. You see, we started the year with a negative $169 million in that entity. The accounting change, which is GASB 75, added almost 162 million to that. In addition, when we did our audit, we found some errors in the 2017 audit from the previous auditor, so we had to restate the financial statements for the previous year, and the cumulative number of that restatement flows through your net position and/or your fund balances. So the next three items were items that were errors that we found in the previous auditor's financial statements that we accumulated all those adjustments of approximately $8.2 million. So you can see the $162 million was a one-time adjustment this year to your deficit. So the number looks a lot worse, but it wasn't. It was because of a paper change, basically. Okay.
The last note in the financial statement is the subsequent event note, which, discloses that there was a judgment against the city for the Act 511 taxes, and it just gives a brief scenario of the situation as it existed when we released the financial statements.
I just have one question on that. So the amount it says that the city would have to set aside would be $40 million in taxes?
Correct.
I think it was reported in the media that it was 50 million. So do you get that number from the city or from the judgment?
We did. That letter, or that number came from the city's attorney, and it was, because these are the December 31st, 2018 financial statements, we're not disclosing what the additional liability would be for 2019.
Okay.
So it is a little bit short of what's been published in the paper.
Okay, I understand. Thank you.
The balance of the financial statements is just required supplementary information, so it's just additional details on the pensions and the OPEB. We're required to report changes, why the liability changes in funding status, contributions, and things like that. So this is all just required supplementary information. And that's pretty much the financial statements.
Any specific questions or anything else?
I'll turn it over, we'll go down the line here, to Councilman Rogan if he has any questions at this time.
Nothing at this time.
Okay. Councilman McAndrew, any questions? Dr. Rothschild, any questions?
No, I don't have any questions. Thank you.
And Councilman McAndrew? Or, I keep doing that. I'm sorry. Councilman Donahue.
No, I have nothing at this time.
I think you answered most of the questions that had come up in the past few weeks. One thing I do want to touch on is just the process of the audit. And I know, Mr. Kohanski, you had come in before to a caucus and we went over all this. But moving forward, can you just kind of summarize what will be done in terms of improving the timeliness of the audit? As you're aware, and you had explained to us the reasons why the audit was late this year, can you just kind of summarize what's going to be done moving forward to make sure that the audit is to council on time?
Yes, we have had meetings with the administration's new appointees into the business office and have determined that we're going to sit down and have a meeting in the next week or two and schedule the date we want the audit, everybody on board, and backdate when we need the information by. So everybody's going to have and be on the same page as to when we need the information to give us enough time to have the financial statements audited and completed by September 30th for this coming year, which is the due date of the single audit to be filed with the clearinghouse. The only thing that may hold up finishing final numbers is or how we have to report is this Act 511 issue, depending on what happens with the courts and what we get back from the attorneys on that and how we have to disclose that. But all the testing and everything else in the financial statements we can do.
Okay.
Okay.
And we had kind of agreed to this previously, is that you would, provide monthly updates to the council through our finance chair, updating us on your progress.
Correct.
And we would appreciate that. And I do want to make the point also that, as far as I know, this is the first time that we've ever had the audit firm come in and do a presentation like this. I do think from a transparency perspective, it's much needed, and I appreciate you coming in and going through it. I really do. So do you have anything else to add?
At this time, no.
Okay. That concludes our public caucus, and we will be back for our regular meeting at 6:30. Thank you again for coming in.
Thank you.